Good afternoon, everybody, and thank you very much for attending our webinar. Anthony Buckley is my name. I am the chair of the Customs Knowledge Institute, who are hosting this webinar. Um, Customs Knowledge Institute, CKI, we refer to ourselves. It's a not-for-profit organization formed by a group of customs professionals. Um, Consultants, brokers, and so on, who have an interest in customs training. And we came together um, as a group to try to promote customs knowledge and the spread of knowledge across the EU in particular, because we were conscious that um, there isn't very much cross-national customs training and exchange of knowledge in Europe, or at least not as much as we think there should be. So we formed as a kind of a cooperative, a not-for-profit organization. An important part of what we do, along with training, is we host the CKI community, to which I would like to invite you all to become members. Um, and this is a forum where we can exchange views, we can ask questions, provide expertise, we can eh, exchange information about projects, and indeed just generally make contact with each other. Again, it is aimed at building a network of people who are interested in customs across Europe. I am based in Ireland. Enrica, who is another director of CKI, is in Lithuania, in Klaipėda. And my other colleague today, Zandra Horgan, is also a director and is a customs broker based in Ireland, in the Midlands. So, and we have, of course, members from right across Europe. So the forum is growing. It shows signs of becoming a very, very interesting place. And we really invite you to join, either to learn or indeed to offer your own expertise to others. Today, we're talking about customs in an economic downturn. Um, each of us, each of the three of us, will make a 15-minute presentation. The presentations haven't been coordinated, so you may hear slightly differing views from the three of us, but then that is the essence of debate and discussion. And in this area of forecasting and predicting what's likely to happen, of course, nobody knows for sure. So different views are very valuable. At the end of those three presentations, we will invite you to participate through the Q&A and chat facilities, which are on your screen, I think on the right-hand side. And do feel free to post comments, questions, or anything else that you feel like posting at that point. All contributions are very valuable. So this is a brief overview. I'm taking it for granted that we all accept now that there is at least a worldwide challenge economically, and there's every possibility of an economic downturn right across the world. Already we see signs of it in China, in the United States, and in Europe. In Europe, of course, it's exacerbated by the war in Ukraine, which has precipitated an energy crisis and a refugee crisis. And all of these things are combining in a way to make 2023 a rather gloomy prospect from an economic point of view. But what does all this mean for customs? Well, first of all, there's a strong tendency towards tighter controls. Since 1995, the trend has been towards globalization, opening up borders, freedom of trade. In the last, you could argue, 5, 6 years, maybe 2, 3 years, certainly, there is a strong tendency towards tighter controls. So There is a proliferation of non-tariff regulation. In Europe alone, you have 378 pieces of prohibition and restriction legislation that are EU-wide. That's not counting national prohibitions and restrictions. And of those 378, 252 have been put in place since 2015. So there's an accelerating pace of prohibition and restriction. And regardless what justification there may be for individual regulations, the sum total of those regulations has the effect from a customer's perspective of acting as a barrier to trade, and a very thick and strong barrier to trade, an inhibitor of free trade. In addition, of course, to those 378, each member state in the EU also has its own national prohibitions and restrictions. So for any EU national importing goods, there is, at least in theory, a need to be aware of over 400 pieces of legislation, which is not customs legislation. This is non-tariff regulation on top of the customs requirements. The development in 2021, the abolition of the VAT de minimis, where goods under 20 euros were VAT free, that was abolished, and that has imposed a new declaration. And again, that was a control aimed essentially at controlling online purchases, very largely from China. Then all national governments want to get greater knowledge of what is crossing their borders, but they want to deploy less staff to do it. So there's an increasing use of computerized analysis. And that leads, of course, to increasing complexity of data sets required for the electronic declarations. We are now on EU CDM 6.2, and I don't know anybody who is gambling that 6.2 is going to stop there. We wait with bated breath for 6.3 and 6.4. And it means that where on the old customs declaration, everybody was familiar with box 1, box 2, box 3, now you have a 10-digit data element for each piece of information. It's becoming very complex. And as with complexity, of course, that spawns further complexity in terms of interpretation in areas such as the definition of the importer, the liability of the declarant in certain circumstances, and so on. Depending on how you declare it, that has an implication for changing the law, and it means that a greater knowledge of law is required because you need to be precise, because your data is now being plowed into various risk modeling engines, and the outcomes will be further audits, more targeted post-clearance checks, and so on. New standards have been published for customs brokers. I've given the reference number of the standard there. It's fairly simple and pretty common sense. So, I don't have anything to object to in the standard itself. But the fact that it's being published is another indication of the move in Europe towards a unified customs system, which requires particular standards and authorizations for certain activities. The Wise Persons Report, the link is included in the slide there, which will be available to you, is quite a significant report because it provides the foundation for the European Commission's intended publication of a strategy for customs. They intend to publish that later this year, probably towards the end of next month. But the Wise Persons Report does not mention trade facilitation as an objective. It's remarkable. First time, I would say, in 30 years that the facilitation of trade is not a primary objective of the European Commission. Instead, the report focuses on security and protection. saying that these are the primary needs of European trade. Um, Considering that the European Union is the world's largest importer and exporter, the largest trading entity by a considerable distance, this is absolutely remarkable and surely is a strong benchmark um, of where we're going. That we're heading back towards protectionism, towards more bureaucracy, more checking, tighter controls. And there's a growing emphasis on AEO and trusted trader. It's being produced, it's being once again lauded as the magic bullet that's going to solve all our problems. Just make sure that you trust your traders and then you're fine. A problem with that is, again, it's the larger traders. It assumes that AEOs are going to do everything right. It's assuming that they're going to be monitored in some way. It projects forward, I would say, a rather hypothetical model of human behavior, which is unlikely to manifest itself as simply as uh, as its proponents would wish. So the challenges for customs, the slowdown in demand implies a slowdown in trade volumes, especially in the number of transactions. So smaller transactions where cost is crucial, where the cost of administration is crucial, those transactions will fall off in number if economic pressure comes on. The larger high value transactions, which can afford to carry high administrative costs, they will be little affected, but the number of transactions will probably fall. The cost of customs clearance is likely to rise as customs brokers need to be familiar with more and more and more regulation. And indeed, as customs brokers are contemplating a rising likelihood of customs checks. The cost of transport is historically high and has been since COVID, largely due to the effects of COVID-19. Um, I can't see it returning to pre-COVID levels in the next year. It will return to reasonable levels at some point, but again, as we increase regulation, as there's more protection at the borders, the cost of transport will be pushed upwards as well. So it won't rapidly fall to pre-COVID levels. Complex supply chains are more difficult to maintain because if we're in an era of de-globalization, which is a word I saw in a magazine, which I thought appropriate, if we're in that era of de-globalization, borders generally will become more difficult to cross and more costly. So complex supply chains where production is outsourced to several countries and happens in a chain, it becomes more difficult and more costly. New regulation, stricter control means retraining, upskilling by customs brokers. You have to learn about the new regulations. You have to understand precisely what the legal consequences of new data sets and new risk analysis. You have to understand all of that if you're to be competent in your job. So retraining is there. And extending the risk analysis beyond the declaration, that is, these complex computerized risk modeling engines, is going to place a strain on the companies and brokers' record systems. They will need to be more sophisticated to be able to respond to queries from more sophisticated tools. Of course, there are opportunities. The single window integration, which is coming next year, we hope, integrating regulatory checks such as SPS checks, integrating those with customs controls, that will certainly help with controlled goods. And generally, globally, if you are using this trusted trader and advanced information model worldwide, it will force greater supply chain integration. So there will be less kind of disparate elements in the supply chain. The supply chain will have to, each part will have to support the next. And it may lead finally to the implementation of blockchain for customs, which would be generally, I think, a positive thing. The desire to increase AEO numbers, which is very clear, will force the policymakers to add enhanced benefits, to give more real, tangible benefits to those who go through the process of obtaining AEO authorization. The pressure for harmonization may decrease national variations, which is something I think in Europe we would all welcome. If German customs behaved the same way as Irish customs and vice versa, then the world would be a happier place. So that's a good thing. And an increased focus on costs will encourage companies to get it right first time, to take less risks, to be sure that they have the best professional advice and professional service providers. And that is good for us and our colleagues who are customs professionals. Overall, I think the worst affected will be the small traders. Small traders are always the most vulnerable. So if there's a change, they're always likely to be the ones who lose. But as a consequence, when you know this is coming, there's an incentive to collaborate, to form networks, to form support structures. And indeed, CKI is an example of such a support structure where you can collaborate with colleagues, and it gives you a strength that you would not be able to manage on your own. For companies and indeed for brokers, sophisticated digital systems operated by skilled people are essential. You really cannot take a risk in this growing environment of checking and double checking and analysis and examination. You really need to know that your systems are robust and are operated properly by good people. So it's important to invest in staff competence and in training, develop your in-house capacity or capability, and explore diversification. In other words, look at different ways of doing things. Perhaps it's different products. You need to examine all the time how you're configured, how you're skilled. So that's my 15 minutes. I'm sorry I seem to have run a little over. So apologies to you, Zandra, and I will hand over at that to Zandra Horgan, my colleague, who will make the next presentation.
Good afternoon, everybody. As Tony introduced, I'm also a director with CKI, but my background is in accounting. I'm a tax consultant, customs agent, and a customs advisor. So I am here today to highlight the correlation between customs, inflation, and an economic downturn. So to start off, just on inflation and what it is, it's a decline of purchasing power. So you buy less with your money from one period to the next due to price increases. So if you are buying your basket of goods in one period and you buy the same basket of goods in period two, you need more money to buy the same goods. And why do we have price increases? So there are two different scenarios. One is where the supply and demand, there's a mismatch. And it's not so much that demand increases, but that there has been a scarcity in supply. So we would have seen this during COVID when factories were closed for 6 months and longer. There were no goods available. We still had the same demand, but there was a shortage in supply, so price increased. Then when war broke out in Ukraine, shortage in supply in fertilizer and wheat, those prices increased. So The other scenario that we have is where manufacturers have an increase in cost and they transfer that cost to the final consumer by increasing their prices. And where they have cost increases can be due to legislative changes in the tax regime. It can be imported inflation. By that, we mean the cost of raw materials if they have an exposure, like currently that they're buying from the US, the deviation in the exchange rate has increased the cost of their raw materials, or if there's wage increases. And what I'm going to talk about mostly today is customs and Brexit and how that has increased cost in the supply chain and how it has resulted in inflation based on increased costs in the marketplace. And I know some people can say America also has struggles with inflation and they didn't have Brexit, but they have a 200 billion trade war with China. So the cost of Brexit to us, if you look at it, the UK, it's the 5th and 6th largest economy in the world. 45% of the GDP is in relation to EU trade. And we now have a customs border to continue to trade in that marketplace. So from the 1st of January, we're incurring the administrative cost of the customs border. So this is your import declarations, your export declarations, the GVMS system, your goods vehicle movement costs, your IPAS and your traces costs. Then we have also the VAT implications of leaving the EU VAT regime has impacted certain markets. And also the TCA. This is the EU-UK Trade and Cooperation Agreement, the regulation in relation to preference. So under the TCA, while we have EU origin goods can claim preference, that's 0% duty on entry into the UK, and UK origin goods can claim preference 0% duty on entry into the EU. That preference can only be claimed once. So we are incurring a lot of instances where we have goods on second entry paying duty. Then on the 15th of April, we had a reclassification of our composite products. That composite products are goods that contain both plant and animal origin. So the reclassification that was introduced in the EU in April 21 was to reclassify them as low risk and high risk goods. So previously, these low risk goods would have had no customs borders checks, but now even if they contain 1% egg or milk, they now require full border control post checks, leading to all the additional haulage costs and the administrative costs. So costs in that area have trebled. Then we have, on the 1st of July, the introduction of the IOSS system, which was the import one-stop shop system for the consignments with an intrinsic value of less than €150 now need to be recorded on the IOSS system and VAT becomes payable. And that was due to expected to generate between 7 and 9 billion in extra VAT. Then in January 22, there was new health certs for product of animal origin. So where we are now in the marketplace, 20 months on, is all these costs have hit the marketplace, and we still have the legislative cost of Brexit still to hit the marketplace. So what I mean by that is the deviation in regulations. So most products that need to continue to trade in the UK or in the EU will need to have two legislative bodies, both in both jurisdictions, and that cost still has to be impacted in the supply chain. So I have taken some examples of costs and what has happened and why we have such high increasing in costs and in prices. So if we look at the motor industry, that was impacted by the VAT regime, customs, and the TCA. So the VAT regime, because in Ireland, our second-hand motor cars, 90% of our second-hand motor cars are actually sourced from GB. But because GB left the EU VAT regime, we could no longer claim VAT on the margin scheme. Then, because of the TCA, even though most of these motor vehicles were originating in the EU, we ended up paying duty on those goods. And we also have then the admin cost. So a quick example for previously, before 1/1/21, if you bought a car for 5,000 and it was sold in Ireland for 8, there was a profit of approximately 1,600. After 1/1/21, if you bought the same car, the profit was only going to be less than €300. Now, we anticipated this meant the decimation of the motor industry, but what happened was, because of the increased costs, they were passed on to the final consumer. So prices increased by 2,000 and more, because once one increased price, what resulted in the market was what we call price gouging, where one person increased price, and even if they don't have the same costs, they will increase the price because the garage down the road can get extra for their price. So at the moment, while we thought, right, there was going to be an increase in costs of 25 to 40%, what has happened yesterday in the market, there was a report that our motor vehicles increased by 67%. And that's because we have also a shortage of supply. So we've had, you all know your motor vehicles, once you drive them out of the garage, they depreciate in value. But what we've had here is, even though they're wasting acid, they were appreciating in value. So the HMRC are actually introducing a VAT rebate scheme, which will assist the marketplace, and increasing interest rates in this scenario will impact on price gouging and bring back prices to normality, we hope, within the next 12 months. So if we look at product of animal origin, the rules for bringing in our foodstuffs, right? It's 100% documentary check, 100% identity check on arrival in port. They were also subject to inspections by EU legislation. And again, the changes that were introduced in April have trebled the costs. We also have the identity check, which is a seal check on arrival in port. It has meant that the SME sector is no longer viable and are able to supply the marketplace. And to give you an example of what I mean by that, we had, if you had a supplier sending a full consignment before 1/1/21 and the consignment value is 10,000, haulage fees are 1,000. Post 1/1/21, it's the same. The consignment is worth 10,000 and the haulage is 1,000. But we have the admin cost. So we need a vet to complete the health cert. We need to do the customs import and export declaration. We need to create a shed. We need to validate that shed. So all the extra admin costs we've put in at approximately 4%. But if those goods, this is your foodstuffs that originated in the EU and are returning to the EU, or if it's going from mainland Europe into GB, into ROI, we pay duty. So now our costs have increased by 15%. And that's your best case scenario without any delays in port and all your paperwork being in order. If there are delays in port, you are talking about adding thousands onto that cost of consignment. When you look at the SME sector, and I know Tony mentioned this, that the SME sector has been impacted significantly. This is one of the main areas. If they were bringing in a pallet and the value was 1,000, they were able to avail of groupage for their haulage to bring it across. with a value, let's say a cost of 200. But post 1/1/21, because of that seal check requirement, it's very difficult to actually get a groupage consignment. Most of our clients are now sending dedicated consignments, and instead of sending one pallet once a week, they're sending 4 pallets in the month. They've reduced their flow of goods, but they will have the same admin costs because they still need the health cert, they still need all their sheds, their private attestations. So we have then for the SME sector, their costs have increased by 104%. So this is where we have some of the legislation is financially discriminatory against the SME sector that we should look to remedy. And also I've put there and a question mark, this is where I've said the cost that still has to hit the marketplace is the regulatory costs, because from 1 January 24, if you're supplying prepackaged food, you need to have your food business operator in both jurisdictions. So that hasn't, there's been easements in place, but those costs haven't impacted the marketplace yet. So they are just some examples of what has happened and the costs. We're talking billions that has hit the supply chain over the last 20 months. So while we are in an economic crisis, we have the war, we have our energy crisis, and we use our customs border in times of war to impose sanctions. What we could also do in times of an economic crisis, look to introduce easements into some of our regulation. And some of those easements I have highlighted is the 100% identity check on arrival import for your product of animal origin. Is it needed? No. For the goods, for your low risk composite goods that require a private attestation, that 100% could be 0%, because remember, you still have a full 100% documentary check. If your documents are in order, it should be sufficient. Or for all other goods, it's risk-based and reduce that percentage basis. That will open up the marketplace again to the SME sector, not requiring a seal check on arrival. Then also in relation to RGR relief, this is your returned goods relief. As stated, to claim preference on EU origin goods, it cannot be claimed on second entry. But currently under the UCC, the only documentation that's acceptable to claim return goods relief and to prove that the goods that are re-entering the EU originated in the EU is the original export declaration. And that is, in practice, that is nearly an impossibility to retrieve, because it just gets lost in transit, because you're not going to your supplier, you're going to your supplier's supplier to get the documentation. So could the UCC look at accepting different documentation? For motor vehicles, the VIN number gives you the origin. For foodstuffs, we have the statement of origin on the invoice. And while we are in crisis, it should be sufficient to actually be acceptable for RGR relief to ease the costs and duty on our foodstuffs. And also just the place of destination rule. In the example that I showed you, it was on the assumption that those goods were going to one place of destination. We've one importer, we've one exporter. But if you have 5 different places of destination, we have 5 different health certs required, 5 different private attestations required. But this is where, if the rule changed to rely only on the importer's records for traceability, that reduced the multiplication of documentation required, because we know we have further costs to impact the marketplace, which will definitely force us into an economic downturn. And what we should be doing is looking at the marketplace and how we can reduce some of those costs that businesses incur. And where we need to get to is disinflation, and disinflation is where we still have inflation, but at a reduced level. So while we have the energy crisis and we know inflation is high, wages are going to increase, we know there are further costs coming down the line, we should look at our legislation to try and introduce easements and reduce some of the costs in the marketplace. So thank you very much for your time, and sorry if I have gone over, and I'm going to pass you back to Enrique.
Thank you very much, Sandra. Thank you very much, Tony. You both gave a very broad overview and so many issues to think of. What I noticed from your both presentations, you both mentioned, it's in the topic also of the today's theme. So Tony said focus on costs is one of the aspects, and you, Sandra, as well, you directed it to reducing costs. So that's about the topic of my presentation. And Sandra, if you would stop sharing, so I will start then sharing mine.
Apologies.
So I will speak about management of finances, and I'm quite a lucky one because I have narrowed down my topic and will focus on the aspects that are of benefit to business, not only in the times of economic difficulties, but I think they can bring benefits in all the times, and customs practitioners not always know them. We not always have time to think of that. So I think when the times are hard and when we need to focus on this, it's the right time to do this systematically, to think through where else can we save money of the company and thus help to go through those difficult times. I haven't introduced myself, so Tony introduced that I am CKI director, as well I am CEO of Customs Clear platform, and my customs knowledge background is as well as Sandra's in customs brokerage, but I have been working also for logistics companies, for manufacturing companies. We have quite a broad overview of the issues that can happen and what helps companies to save. And the companies always raise the question to the customs specialists, because customs specialists, they don't earn money. They look at the possibilities, how to make the operations better and how to contribute to the answer, how to spend less. This was emphasized also in the current issue of the Customs Compliance and Risk Management Journal, which focuses on compliance. And in the editorial word, Samuel Draginic, one of the editors, wrote this word. He also took the opportunity to speak on the times of economically difficult times, and he said that we, customs practitioners, must focus on robust solutions that utilize current resources of the company. Do more with less, as the saying goes. And one more thought from the editorial word. Risk of violations, which attracts enormous fines, may be more easily absorbed when times are good, but when times are difficult, every cent matters. So avoid unnecessary costs by being compliant. Two aspects to focus on and to discuss, and I would like to start with a practical case of compliance related to simplifications, how it is important to comply when you utilize benefits granted by customs. The situation is real, taken from the judgment of the European Court of Justice, and it happened so that shipments, many of them, were brought to a customs warehouse and placed under customs. The goods were placed under customs warehousing procedure, and then the goods, as it usually is from the customs warehouse, were re-exported. Everything went fine. Customs declarations were lodged in time, and this happened in Germany. German customs was also quite happy. However, happy at the time of clearance doesn't mean that customs will be happy at the time of audit. Customs came to audit after some time that customs warehouse, And what they found that removals of the goods at issue were not entered in the stock records until 11 to 126 days after the removals took place. As the obligation to enter the goods into stock records without delay was not fulfilled, Customs asked the warehouse to pay duties. Customs warehouse, of course, disagreed. They said, we have done everything correct with customs declarations. The goods are no more in the EU. Can it be so that just entering a little bit too late into the records, the goods can trigger the customs debt? The question was not so simple. It went through the courts to the European Court of Justice. And let's see what European Court of Justice clarified. And I think we must keep this always in mind. No matter what simplifications or customs benefits we use, always go back to this decision and think about that. So the court, you see the case number on the slide, clarified that customs warehousing procedure allows the storage of non-union goods with a suspension of import duties on those goods. Entitlement to benefit from such a procedure is linked to compliance with certain obligations. In the present case, the authorization for the management of a private customs warehouse was subject to the obligation to keep stock records of all the goods. The obligation to pay customs duties in such a case is not an administrative, fiscal, or criminal sanction, but simply the consequence of a finding that the conditions required for the purpose of obtaining the advantage deriving from application of the customs warehousing procedure have not been satisfied. The procedure implies the grant of a conditional benefit, which cannot be granted if the related conditions are not respected. So huge financial losses for the customs warehouse. And here I would like to share with you the takeaway. The first takeaway, there will be three in my presentation, so that never forget that simplifications and customs benefits are conditional benefits. You cannot enjoy the benefits if you don't respect the conditions. Besides reading the case law, if you would like to learn more details, you could also watch the short animated video, which is available on the platform, and the link is provided on the slide. So we discussed the compliance side, but most probably you have the question, okay, it seems, and you know that there are many simplifications. What are all the benefits and simplifications set out in customs law, and how to get a systematic overview? Is there a list of all the benefits and simplifications? Unfortunately, I haven't found such one. So I think every company has to go through the law and analyze it. And I want to suggest how to do that, a method, so that you can go through. I would like to suggest to start with the hierarchy of law. We have three layers: the international, the union, and the national. And look, first of all, for keywords. And the keywords which relate to simplifications and other benefits are quite many, as you see on the slide. It's relief, preference, suspension, special, specific, simplification, comprehensive, authorized, and so on. So if we would look for those keywords on the international level, first of all, I think it comes to everybody's mind, the most used and best known benefit, the preferential tariffs, set out also in the TCA Sandra was talking about. What the European Commission says, it releases reports of utilization of free trade agreements. It says that these agreements are underutilized. What that means? That means that traders, most probably the SMEs, don't have sufficient knowledge about the possibilities and don't utilize them also. It's worth to raise the question for the company whether we know if any preferences apply to our product, and to take an informed decision to utilize those preferential tariffs or not to do that. If we would look at the national level, here, most probably what comes to the minds of specialists are the national duties, VAT and excise, and it is always worth looking for suspensions and possibilities that allow to manage finances better. Also, it should be mentioned that the Union Customs Law allows the national member states to decide themselves on some benefits and simplifications. So you should look also at more customs-related rules and various operational benefits. So, but however, the Union law is the main law in the EU, and let's take a look how to analyze it more in detail. And here I would suggest, when you open the Union Customs Code, to go title by title and to take a look at the benefits. There are not so many titles, and it becomes immediately simpler. You don't need to think of 3 regulations of 3 thick books. You just have 9 titles. And even from looking at those titles, you can see the keywords we mentioned already. So you see in the title 6, the relief. You see in the title 7, special. So, but let's take a look at several titles and then several keywords that we find there. So, if we would start the analysis from the title 1, general provisions, we would immediately find the keyword in the Union system of reliefs from customs duty. As a company, and if you haven't considered it this year, I would suggest to raise the question, do we know for what the relief applies? And whether it applies to our products, whether it would be beneficial to use it or not. So to make an informed decision and to know that such relief exists. Then what other keyword is simplifications. We find in this title authorized economic operator for customs simplifications. Here we should raise the questions, we as a company, whether we want the status, whether it brings benefits, but on the other hand, the question might be raised, must we get the status to utilize some benefits? Because some customs benefits are granted only to those who have the status. So it's important to keep in mind. Okay, let's proceed to title 2, factors on the basis of which duty and other measures are applied. In this title, you find an interesting simplification. I don't know whether broadly utilized, but there are certain companies which can take advantage of it. And again, it's about customs value determined on the basis of specific criteria. And again, you should raise the question, so do we know the simplification? Does it apply to our customs valuation questions? Can we benefit from that? So then let's proceed to title 3. What we can find there. So, and title 3 is about customs debt and guarantees. Guarantees are very important. We don't want to pay immediately at the time of customs clearance, or we want to use other customs facilities, and we need to provide customs guarantee. From my experience, I met several companies which didn't know that they can reduce, or didn't think about that they can reduce the amount of the comprehensive guarantee, the reference amount, and reduce to such a level that it could become guarantee waiver. So it wouldn't cost for your company at all. So this might be, if you meet certain conditions, a great opportunity to lessen the costs. Okay, let's proceed to. So I didn't find something very exciting in the chapter 4, but I found in the title 4, but I found great simplifications in title 5. Again, it depends on the specific situation whether the simplification is great, and you should analyze them. So the title 5 are general rules on customs status, placing goods under a customs procedure. And here we have the simplifications related to customs declaration. There are various situations when we receive the goods, but we don't have all the necessary data or the necessary documents, and it is a frequent case. In such a case, you can ask customs for an authorization to lodge a simplified declaration, which omits certain required data or documents. Just please note, it sounds very nice, just please note that anyways a declaration, customs declaration full must be submitted, and it is called supplementary customs declaration. Then another option is that you don't need to lodge any customs declaration at all, and it is called entry in the declarant's records. But no declaration at all, only at the time of customs clearance. Anyways, a supplementary customs declaration shall be lodged later. And finally, there are more simplifications, so you really should do a thorough analysis of them, and I picked just some samples. I would like to draw your attention to centralized clearance, which is not a new concept, but which was not working in practice. And I met this year a company in Germany which started utilizing this possibility, and I think it's a great one. So and might help many companies to optimize their operations. Therefore, I would like to share with you and to tell how it works, and that it works already in general. So what centralized clearance means? This simplification is meant for companies which have customs-related activities in several member states. Let's imagine that our company had its headquarters and some customs-related activities in Germany, has a factory in Italy, and has a warehouse in the Netherlands, and performs from all these countries exports. If we work the standard way, so we lodge customs declarations. Here, let's say we do this ourselves, and here we subcontract. We have contracts with customs brokers. Quite a lot of management and also compliance issues and complexity increases due to those operations in various countries. Can we simplify this? Yes, and you know already the answer through the centralized clearance, which means communication with single customs administration. So you must apply for authorization, and when you get it, the process would look this way. For example, you want to do export declaration for a shipment which is already presented at Italian customs. What you do, you lodge customs declaration with German customs and say that, look, my shipment is in Italy at customs office so and so, and we wish to do the export clearance. The German customs looks at the declaration and thinks, we would like to check the goods. What they do, they send a message, electronic message to Italian customs and ask to check the goods. Customs in Italy does the check, everything is fine, sends the message back that everything is fine, and the goods are released, customs clearance is done. The trader is not involved at all in this communication. Both customs offices communicate between each other and do the work. So for the traders, it's very convenient. You can centralize all your clearance processes in one place, in one member state, and maybe in your headquarters. I just should note that not all the countries are ready with their IT systems to work with this centralized clearance. Therefore, Italy, Netherlands, I think they both are ready, but some member states will say, no, this is not yet possible. with us maybe next year. So please keep this in mind. But I hope that for the countries you are interested in, it will be possible. Okay, let's go to chapter 7, special procedures. Also a very exciting chapter worth studying and dedicating a lot of time, because here we have the special procedures and why they are called special, because when we apply them, we don't pay duties and taxes, or we pay less, or we can utilize other benefits, such as, for example, delivering goods presenting goods not at customs office, but at the premises of authorized consignee, and so on. So really worth to study and to look at. And the special procedures are divided into 4 groups. You see transit, storage, specific use, processing. And we will take a look at one of the procedures, the inward processing, more in detail and what benefits we can find there. And also I will reveal that it's very interesting that inward processing is a benefit itself, but there are benefits inside the benefits, and with this example I will discuss them as well. So how inward processing works, let's again think about a practical example. Let's imagine that we produce sofas in the EU and we import leather. The duty is 6.5%, and we don't want to pay it because we export those goods. Though some goods stay in the EU, we have customers in third countries and also in the EU. So what to do not to legally not to pay the duties? It's not that difficult. We place those goods under inward processing procedure. So when we export them, the duty rate is 0. We don't pay any duty. And when we release those goods into the free circulation, we release them not as the leather, we release them as sofas, and the tariff rate on sofas is also 0%. So in both cases, we pay no duties, a great plan, we achieved what we wanted, not to pay duties at all. And I mentioned that it is worth studying other benefits inside the benefits and what are these benefits as relates to inward processing. So you will find that when reading the law, you will find the possibility to use equivalent goods. In the process, you will also find the possibility to transfer, to move the goods without customs formalities. You will also find generalization possibility of reports. You will also find that there is a possibility to receive one authorization for several member states. So we don't have time to go much in detail, but if you wish to learn more about them, there is a great article by Evita Dobrovalskina, so you are welcome to read it. And here we come to our 2 key takeaways from this part. So the takeaway 2 is systematic analysis can reveal many possibilities of custom simplifications and other benefits, and even benefits inside the benefits. And most important is the third one, that business risk consists of 2 elements. One is non-compliance, and another is missing the benefits. The competitors might use them, and you might lose your competitive advantage if the benefits are high. So, and I was talking about structured approach. If you would feel that you lack structured customs knowledge, structured overview of this broad area, we invite you to take the Customs Clearance and Trade Compliance in the EU course. You can find the link on the slide. And the course consists of 21 modules prepared by various experts from industry and from academia as well. And if you would look at the content, which is grouped into 4 groups, you will see that today in my presentation we touched many areas indeed. Customs legislation, we mentioned VAT and excise as national duties, we mentioned customs duty, we mentioned preferential origin, we touched customs declaration simplifications, we also talked about special procedures focusing on inward processing, we were talking about customs authorizations, the risk management, and also IT systems. So all is in the course, and you will really get the full overview. Thank you very much. If you would have questions after the webinar, you are always welcome to write to this email on the slide. And our time is almost over, but if you would have questions, I think we can stay a couple of minutes and answer them. Thank you very much.
Okay. We have a note from Mark Herridge on centralized clearance. Centralized clearance. Yeah. In fact, Ireland was the first to use centralized clearance. It is used by pennies stores. All of their European clearance is carried out in Ireland. The other countries, the European Commission were reluctant at first and were somewhat hesitant about its implementation, but they now are promoting it. Some member states, as you say, Mark, have issues around control, but that's I feel sure that it will progress.
And there is question, do you need that authorization for UK? So I think UK centralized clearance, there is no such concept. At least I don't know, Tony, maybe you know.
Well, it wouldn't apply because there is only a single customs authority. So it doesn't apply within a single country. It's only in the EU where you have several customs administrations. Well done, Mark. I never knew that you were the one that managed it. Yeah, that's good. Okay. I think Vlad will probably wish us to wrap up there at the end of the hour. So thank you all for your interest and your interesting comments and questions. And of course, the handouts are available. I just see one Q&A before we do. No, we have a new. Do you need that authorization for UK imports? That would be CFSP, I think. How difficult is it to get CFSP in the UK? It's not that difficult if you're an established trader, Sunil. You don't need that authorization. The benefits of the main benefit is that you can make a simplified declaration on import and then a full declaration 6 months later. It's of questionable benefit because if you don't have the information for a declaration at the time of import or within 90 days, which is the normal grace period, then actually trying to reconstruct the information for a declaration 6 months later is of questionable benefit. The more, perhaps a tangible benefit would be that you may defer the payment of duty for 6 months. But again, it presents administrative difficulties and it is one that I would approach with some caution. It's more difficult to obtain it now than it was in 2021. The conditions have tightened, but nevertheless, if you're a trader in good standing and without any non-compliance, it is achievable. Okay, have we a new chat? I'm trying to watch the chats here. Yeah, we're fine. I think we're good. Listen, thank you all very, very much. And shall we close it there, Enrica, do you think? And Sandra?
Yeah. Yeah, thank you for your time.
Thank you very much. See you in November. We will have one
See
more.
you in November, indeed. We'll have even more fun. Okay. All right.